Good morning, everybody, and this is your S&P 500 day trade setups for today. So, interest rate noise is out the way, and as I suggested yesterday, the forecast was for 0.5%, and the Fed decided 0.75% was a much better bet. I tend to agree with it because if you carry on just dropping 0.5%, and it doesn't fix it, you've got another month of confusion in the market, and I suppose it's not helping any of the long-term investments. It's not helping pension funds. It's not helping pretty much anyone that has an investment portfolio. So at this stage, I think we'll have to wait and see what transpires. I think the market's still very confused. We formed a pretty solid range bar, and I just want to keep this level in. That's a swing low. This is a strong move last week. We've been sort of ranging so far this week, and there is a bit of a trend line that's formed. Not really that strong, but it's starting. And then we've got to cross over the oscillators, and they're pointing to the upside at the moment. So this is not a bottom. It doesn't look like a bottom at the moment. It's really too messy at the moment. I'd want to see some decent structure forming, and for that to be a bottom. Right, so look at what happened yesterday, and we're going to put these levels in. This was the Fed's the Fed's minutes, or the Fed's press conference, should I rather say, and also the interest rate hike. So look at that. Market was confused. Big swings down, panic, like, oh no, they've raised the interest rate. And then big move up, saying, oh, that's what we expected. So we're forward thinking, we've priced that in. And then nobody taking the bait for the down move, nobody taking the bait for the up move. So basically the bears are trying to sell here, the bulls are trying to buy here, and then meeting in the middle. So that is a clear range bar. Those are the levels that are in play, and this is just another micro level that we definitely do need to pay attention to, because if we regain that, I suspect we should move to the upside. Now, on the Dow, we have an island reversal. You can see, if you watch my Dow video, you'll see there's an open gap here. But on the S&P, you can see this bar has closed below that gap, so that is null and void. Don't see anything there. So all we do have is a weekly gap to the upside, which could act as a magnet. But looking at the oscillators at the moment, starting to cross over, I suspect we're probably going to visit the bottom of the range today. Now, if we get to the hour, you can see not much divergence here. Price is forming a lower high here this morning, but that is the line in the sand to the upside as far as I'm concerned. At 38.43, if we do find some support up there, then you have a fairly decent setup, probably entry around here to there. That's 470 points, and you may end up with like a 200-point stop loss depending on the pattern formed at this level. That is the only trade that I would see for a move to the upside. It would be a long scalp, basically. I'm still a bit wary of jumping in short, and that's just based on the 8-hour. You can see there. So I'd be a little bit skeptical about that. I'd much prefer to see price come up. You can see here, whenever it groups the upside in this downtrend, forms a triangle and then breaks a triangle to the downside. So that's kind of the structure that we're looking for. Not looking to jump in at the bottom here. This price action is way too messy for that. And you can see, rejection bar, range bar on the hour, oscillators all grouped to the upside. So there's nothing really going on here. If I drop down to the 15-minute, look at the confusion over the press conference and the rate hike. I mean, we're talking about a 3% move in the market over that initial. I think it is actually, if you go down to like a 2-minute chart, you'll see what I'm talking about here. Now, there we go. So what's that? 2, 4, 6, 8, 10, 12. So in 12 minutes, we swing 2.5%. That is, it's crazy. That is a pure sign of confusion. There's no other way to explain it. That is just a confused market that has no idea what is going on. Has no idea whether we should be fearing a recession, whether we should be looking for opportunity to buy, whether this is a pullback in a bigger bull market or is it the start of a bear market. So there's so much confusion going on, and there's so many conflicting views of the long-term view in the market at the moment. So you're gonna have to be very, very cautious, and small position sizes, and if you're unsure, stay out of it. Right, so I have 4 levels here. So for me, if we break above 38.43, then definitely a move to the upside to close that gap. Other than that, I'm not really interested in any shorts at the moment, not on the bigger time frames. If you look at the 15-minute, we've got a grouping to the downside, so I'd be watching what's going to happen in Europe. Don't think I want to trade this during the Europe session, rather trade the DAX. The DAX has got some good setups, and then wait for the US Open and see what transpires. You can see moving averages are flat. You don't want to be trading like this. But if we get this big squirt up, come back and test this area, I would anticipate the break, and then once we get the break, that's the trade that I'd be looking for a long scalp, basically up. I don't think I'd go for the gap. I'd go for that level there, which would be 38.43. That's kind of the move that I would anticipate. Okay, anyway guys, that's it for me. Hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.